Well, shareholders for Silicon Valley Bank filing a class action lawsuit against the bank's parent company, also its leaders. The shareholders saying the bank did not disclose the potential risks future interest rate hikes would have on the bank's business.
That's right. The lawsuit looking for unspecified damages for people who invested in Silicon Valley Bank between June 16, 2021 and March 10, 2023. According to multiple reports, the Justice Department and the SEC will be investigating the collapse of Silicon Valley Bank. The bank's board of directors likely to be a focus of the inquiry.
National correspondent Mike Carter is live outside the headquarters of Credit Suisse, another massive bank facing major financial issues. Mike.
Yeah, good morning, guys. Credit Suisse, one of those other banks that some Wall Street analysts are predicting could fall in the coming days. That remains to be seen, however. Yesterday, we learned that Credit Suisse did find, quote, weaknesses in its balance sheet over the last 2 years, material weaknesses. This morning, shares for Credit Suisse, the Swiss banking giant, down by as much as a quarter. Credit Suisse is the 8th largest investment firm in the world. Today, we learned that its biggest shareholder, the chairman of the Saudi National Bank, is ruling out providing any more funding for the embattled Swiss lender.
The answer is absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
Once a titan on Wall Street, Credit Suisse has been hit by a series of missteps and compliance failures over the last few years that have damaged its reputation with both clients and investors, costing several top executives their jobs. Customers withdrew $133 billion from Credit Suisse last year, mostly in the fourth quarter, and the bank reported an annual net loss of nearly 7.3 billion Swiss francs, or about $7.9 billion. That was the biggest loss since the global financial crisis back in 2008. Meanwhile, the New York Post reporting today it had conducted an investigation into SVB Bank, and it found that over the last several years, SVB and its board gave money to Barack Obama, Hillary Clinton, and President Biden, and also to local Democrat congressional reps, including Nancy Pelosi. Donations were also made to Chuck Schumer and for Democrat Senator Mark Warner of Virginia, a longtime member of the powerful Senate Banking Committee. Apparently, contributions went hand in hand with SVB's business model. The Post saying this: everyone knew it was the go-to bank for woke CEOs, one source told the New York Post. They knew they were aligned politically. The companies SVB loaned money to all had a woke agenda. And meanwhile, we've been hearing so much about regional banks over the last few days. We know about Signature Bank in New York, First Republic Bank, Western Alliance Bancorp, and PacWest. Those shares for those companies also down today. It seems like this banking crisis continues on through the week, guys.
Yeah, it's such a big story. I mean, Credit Suisse overlooks investments of more than $1 trillion. You talk about it diving a quarter. That's major to even see what could possibly happen, especially when you see investors like the Saudis saying, hey, we're not helping out anymore here. We'll follow that story. Mike Carter with that. Thank you, Mike.
Got it.